Hello everyone, today's date is February 10th, 2024. I hope everyone is having a good day, and in this video I'm going to go through a quick overview of the NinjaTrader ICT Concepts strategy. Okay, so to download this strategy, you should go to automated-trading.ch and then click on the ICT Concepts strategy menu item on the left of the page. And that will take you to the product page, ICT Concepts strategy. I strongly recommend that you read all the details and the description of the strategy to get to know more about this strategy. But you can also go directly to download section, and from there you can download the strategy for free. And from there you can go to NinjaTrader and go to Tools, Import, NinjaScript add-on, and you can select the zip file that you just downloaded. Okay, so once you install the strategy, you should open a new chart. I will select M&Q for the purpose of this demonstration. I will select 3 minutes time frame. I will select also tick replay. This is required for running the strategy in backtest mode. I will select a custom range. So today is February 10th. I will select from 5th of February until the 9th. And then I should click OK. Now I already have a chart that is opened and configured the same way. So I will switch to this chart. So once you open the chart, you should go to strategies and select the ICT Concepts strategy there. You should click add, and then you will have the chance to go through the properties and select the properties. So this is what I will explain later in this video. Of course, you should click OK to add the strategy to the chart. Okay, so let me explain how this strategy works. But the first thing I want to do is to reduce the number of days loaded. For the demonstration purpose, I'll reduce this to 1 day so we can rapidly reload the strategy and rerun it. Okay, so I left the 9th of February, which is yesterday. Okay, so the strategy works based on 3 phases. The first phase is analyzing the trend bias by using swings and market structure shifts. Well, the second phase is looking for entry setups, which are fair value gaps and breaker blocks. And the third phase is managing the trades. So let me go into these 3 phases by detail. Okay, so the first step the strategy does is to analyze price swings and then use these price swings to define market structure shifts. And analyzing price swings requires setting the swings period parameter, which is the parameter defining the minimum space that separates 2 consecutive swings of the same type. So the more you increase the swings period parameter, the less swings you will find. And the more you decrease it, the more swings the strategy will find. So let me show you an example here. So if you open the parameters of the strategy, first you find, let me enable it first. So the first parameter is draw price swings. So if you check this, you will see the swings. And if you uncheck it, you will not see the swings. So let's make sure that this parameter is checked. And then the swings period parameter is here. So here I set it set this parameter to the value of 2, but if I increase this value, let's say I put it 10 and re-enable the strategy, it will take some time to run. Okay, so now you see that we have fewer swings. That because I increased the number that defines the swings period. And the swing period, what it does is that if I set it to 10 like here, if I have two consecutive swings, so for example here this swing, this lower low was detected here, and then it was cancelled by this next lower low, because the distance between those two swings is lower than 10, because we have set the period to 10. So if I count here the number of bars that separate those two swings, 1, 2, 3, 4, 5. So it's the fifth bar. So we have 5 bars that separates the two swings. So this swing actually cancels the previous one. If I go back and change the period to 3 or 10, or a number that is lower than 5, if I put 3, for example, and I re-enable the strategy, we will see that we will see a swing here. There you go. This swing was not cancelled by this one. So as you can see, the parameter swing period defines the frequency of swings. And so I personally set this value to 3 or 4 or 2. So I strongly invite you to experiment with different values of this parameter. Okay, so the next parameter that the strategy uses to find the trend bias is called the trend swing count, which is basically the number of consecutive swings required to detect structure shifts. So if I go back to the parameters, here trend swing count is set to 3, meaning the strategy will require 3 consecutive swings, either bearish or bullish, to start looking for market structure shift. So let's take an example here. Here, this MSB is market structure breaks. It's not taken into account into the strategy. The strategy only uses market structure shifts. So here an example, and as we saw, the parameter is set to 3, meaning that there are 3 consecutive higher highs here, 1, 2, 3, and then you have a bullish, a green bar that breaks the last one. So here we have 1, 2, 3, and then this bar breaks the last swing of this series of swings. So if we have set this parameter to 4, this structure shift will remain detected, because here we have 1, 2, 3, 4, even 5 consecutive high highs going down before you have a green candle that breaks this sequence. And so if you play with these trend swing count parameter, you can increase or decrease the number of market structure shifts that the strategy will detect. So here, for example, we have 3 consecutive high highs going down, and then you have a green candle that breaks this sequence. Let's take an example of a bearish one. So here you have a bearish market structure shift represented by this candle. This is because we have 1, 2, 3, even 4, even 5, 6, 7, 8, 9. You see here we have 9 consecutive lower lows going up before you have this candle. So market structure shifts are detected with this parameter called trend swing count. You can play with it to increase or decrease the number of shifts that the strategy will detect. Also notice that according to the ICT methodology, the market structure shift will not necessarily mean that we will observe a shift in the trend, but it is a signal that may mean that the market will shift, but it's not a confirmation. It's not a confirmation signal. It's a signal that means there is a potential for a structure shift. Okay, so once the strategy sets its trend bias, either bearish or bullish, it will seek entry setups. And those entry setups can be either fair value gaps or breaker blocks. And so if you go to the parameters of the strategy and go to the entry setup section, you will find many parameters, but here by checking and unchecking those two parameters, enable fair value gaps entry and enable breaker blocks entry, you can disable those entries. So I personally prefer to leave only fair value gaps because by running many back tests on the strategy, I found that fair value gaps give uh, more profitable entries. So let's go back to the strategy, and if we go through the entries here, so here we can see that we have a market structure shift, a bullish one. So the strategy sets its bias to bullish, so it will only enter bullish trades here. And so after this event here, the strategy found a fair value gap defined by those three candles. And also fair value gaps have their specific parameters here. If you go to the fair value gap section, you have two parameters, which are the same three candle type, which is a checkbox that you can check, and you have the minimum gap in ticks. So the first parameter here is the same three candle type. And this parameter actually restricts the detection of fair value gaps to fair value gaps with exactly the same candle type. So let's search for an example where so here we have one. So I deactivated the same three candle type parameter, and here we have a fair value gap, a bearish one that has been detected by three consecutive candles that are not red candles. We have two green candles and a one red candle, but we have the condition of the wicks here that defines the fair value gaps. So this parameter actually will give you the option to allow detecting imperfect fair value gaps, which are not composed of candles of the same type. So I put back I rechecked this parameter because I personally use this condition. I prefer to only have fair value gaps composed of three candles of the same type. The second parameter here is minimum gap ticks, and this is very straightforward as a parameter, and it actually defines the minimum this gap here between the wicks of the that define the fair value gap. So here I put it as 15. 15 ticks is approximately 15 over divided by 4, which gives approximately 3 points or 4 points, 4 points minimum weight for the fair value gap. So if you increase the value of this parameter, we'll have fewer fair value gaps because you will be restricted to, larger fair value gaps. I personally, for the MNQ, I set this value to 15. I think it's a reasonable minimum weight for value gaps, and this parameter allows to skip, very small fair value gaps. So, for example, if let's try and put another value here. Let's put 1. Let's put the extreme value of 1 as the minimum weight. Here we will notice that we will detect many fair value gaps, even the very small one. So you notice here you have a very small fair value gap here that has been detected because we have a very small gap. So you can see this parameter is very useful because it allows to remove all the noise of small fair value gaps. So once the strategy finds a candidate entry set up, it will perform a last check regarding risk. And this comes from the parameter max risk currency, which is here in the order management parameter section. And so the max risk currency parameter will define the maximum allowed risk in currency, in dollars, that the strategy is allowed to take in one trade. And so to calculate the risk, the potential risk before opening a trade, the strategy will use the stop loss strategy parameter, which is here. So you can set different kind of stop loss setting strategy. Actually, you have three choices. You have the zone break price, you have the last swing price, and you have a fixed currency value. So currently I'm using the last swing price, and if I go and re-enable the strategy, okay, so let's take this example. So here at the close of this candle of the fair value gap, the strategy will open a trade. But before opening a trade, according to the stop loss strategy, it will calculate a risk that will be taken if the trade was opened. So here, by using the last swing stop loss strategy, the last swing actually is here. At this point here, the last swing is at this price, and so the strategy will calculate the risk that will be taken if we set the stop loss here. And of course, another parameter is used here, which is the order quantity. So here I put the minimal quantity, which is 1. But if you increase this to, let's say, 4 or 5, then the risk here will be calculated, and the strategy will see and will decide if the risk in function of the order quantity and in function of the max allowed risk, if this position of the stop loss here allow us to take the trade. So for example, if this swing here was farther away, let's say it was here, maybe by calculating the risk here, the potential risk is superior than this maximum risk currency. So let's try something here. Let's say I put this max risk currency to very little amount. Let's put 1 here. This means I tell the strategy to not risk more than $1. Of course, this is not realistic, but for the purpose of demonstration how this works, I will put this to 1. I will enable the strategy, and yes, you guessed it, this strategy will not open any position because at each position it will find that it's too risky because we will risk more than $1. So here in the log, if you open the NinjaScript output, in fact, the strategy will each time it finds a risky entry setup, it will write a log line here saying that risk higher than allowed, and so the entry setup was skipped, and it will write this every time it finds an entry setup. This is because we set our risk to very low value, and so this was to explain this mechanism of risk taking and whether the strategy will take the trade or not. So to conclude, using order quantity, max risk currency, and the stop loss strategy here, the strategy will decide if it will take the trade or not. And so if you change this, let's go back and explain the other stop loss strategy. So I explained last swing price, but if you put this as zone break price, let me enable the strategy again. The stop loss will be set to the, I think I didn't put back the maximum risk to, yeah, max risk. Yeah, let's put back to 100 so we can see some trades being open. Okay, so the here, if I put the stop loss strategy to the what we've put here, we've put the zone break price. So the zone is the fair value gap. This is the zone, and if we choose this stop loss strategy, we will not put the stop loss at the last swing, but we will put it here below this zone, which I call the break price, which is the level required to call this zone broken. So here, below the zone, and for a bearish entry, it will be above here. It will be above the zone. Last stop loss strategy that you can set will be a fixed currency value, which is a, as its name indicates, it's a fixed value, which is here, which is the same as the maximum risk currency. It will take, it will stop loss, it will set the stop loss to a level that reflects $100 of stop loss. So it will not take into consideration the price action. I personally use the option last swing price. I prefer this option because it takes into consideration the action price, and I found it to be the most profitable stop loss strategy. Okay, so once the strategy sets its stop loss price after an entry, it also calculates the take profit price, which can be set according to multiple options. So if you go to the parameters here, we see this take profit strategy in the order management section. And this parameter will set the strategy to use for setting the take profit. And this is dependent on the stop loss price. So the first option is fixed currency value. Now this option will not depend on the stop loss price, but it will depend on the take profit currency other parameter here, which sets in dollars the take profit that you want to set as a fixed value. Other options you have to set the take profit price is setting a win-loss ratio in function of the stop loss price. So here I set this as a 1-to-1 win-loss ratio. And if I go back and enable this strategy, and of course it depends on the stop loss price. So here, if I take this example and I zoom to this example, for example, we see that this entry, and we have set the last swing price as the stop loss strategy. So at this level, when this trade has been opened, the stop loss price was here, and we have set the take profit price as the 1-to-1 ratio. So the take profit was taking this distance here, the same thing, the same distance in the other direction, and it has set the take profit price to a 1-to-1 ratio. Same thing to the other examples. If we go back and look here, this example, so this is the entry price, the stop loss price, and we have taken the same distance into the other direction. If I change this, for example, to let's put a 2-to-1 win-loss ratio. So the take profit will be 2 times the stop loss. Okay, so you can see here the same example that this distance here, defining the stop loss distance, we take 2 times this, and we end up with the take profit here. So we have many other options for the take profit. I personally use the 1-to-1 win-loss ratio. That's a personal preference. But you can also experiment with other values. Okay, so once the stop loss and take profit has been set, you can also choose an order management strategy that will be executed as long as the trade is open. And this can be set using this parameter here called order management strategy in the order management section. And by default is set to the value of none, which means you don't use a management strategy, but you can choose to set one of those two other methods. I will first explain this first one called trail stop on swings, and it's basically a trailing stop method. And to better demonstrate this, I will set the take profit to a very wide, very far price, and I will set the take profit currency to very far value. I will enable the strategy, and hopefully I will be able to show you how this works. Okay, so I have set the trailing method as a order management strategy. So here the entry, the trade has been opened, and then the stop loss first it was set here, and then at each new swing low, the stop loss will be set only in the winning direction. So first here, and then it went here, 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 then here, then here, then here, and then here, and then the price went down and hit the stop loss, which was being set here. So it's a good way to trail the price and let the trade run and generate the maximum amount of profit. Same here, so we can see that the initial stop loss was set here, and then it was moved at each new swing low, here, 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 into this stop loss, into this swing. It was, in fact, the drawing of this swing was removed because the swing itself was cancelled by this by this candle. But of course, the cancelling was done at the bar close, but the stop loss was set and it was hit at this level. Same here. Stop loss here, then here, then here, then here, then here, then at this level, I think. No, it was at this. This is last swing, and then it was closed at this level, or I think it was here. Same thing here, I think. No, this in fact this trade was closed because we hit the session. I said the session exit at 16 o'clock EST, which makes it 10 p.m. European time. So this was closed because the session was to be closed. So I think it's clear for the trailing method. I will explain the other order management method. So the other order management strategy that we can set is the dollar cost averaging strategy. And you can set it here. The order management strategy is here, dollar cost averaging. And what this method does is that it will increase the quantity of the position each time we have a candle closed on the losing side, in the hope to make the break-even price closer to the current price. So the ultimate goal of this method is to close the position as fast as possible at break even. Oh, what is this? Let's put back the take profit parameters. So I will set back 1 to 1. I will set the maximum take profit to 100. Re-enable. So as you can see, this dollar cost averaging will only be triggered if the price goes below or on the losing side of the trade. So here we see that there is no bar that has been closed below the entry price. So this method was not triggered at this example. Let's go see the next one. Next one, same thing. There was no bar closed below the entry position. Here we can see that if I zoom in, so in this example, the entry price was here. So at the close of this red candle, the strategy opened the trade here, and then the price went directly into the losing position. So the strategy will wait until we have the first red candle, and here red because we are in a short position. So at the close of the first red candle in the losing region, we have an increase in the position. So we entered with one lot quantity, and then here we increased the size of the position by one another lot, and so the average price of the position moved from here to here, because this is the average price between this order and this order. So as you can see, at the price being at this level, we pushed up the average price closer to the current price in hope that we close this position as fast as possible, because the price didn't go in our favor. So as you can see, the price went here and then went back into the new average price of the position, and then the position was closed. If I go to, let's run the strategy on another day, the 8th of February, in hope to find better examples to explain this dollar cost averaging method here. Okay, so let's take this example. So the enterprise was here. Same thing, the price went into the opposite direction of our favor. And here we find a red candle, so the strategy increased the quantity, and then the average price moved up, and then the strategy closes at the average price. So let's talk a little bit about the parameters used for this dollar cost averaging, and we have a specific section for that. Here, the DCA or grid, we also call this a grid strategy. So we have two parameters, which is the break-even profit shift and the grid size to break even. So let me start by explaining this second parameter, which is the grid size to break even. Here we set it to 2. And 2 means that the strategy will close the position at break even starting from 2 orders. Here we have 2, so the strategy closed the position at break even because we had two orders or 2 components of the position. Now if we set this to, let's say, 3 and rerun the strategy, there you go. We see that two orders were not sufficient. So the strategy, even though here we had opened the second order and we went to the break-even price, the strategy didn't close the position. And there we had another order increase, because we had a red candle closing on the losing side. So here we increased for the second time. So in total we have 3 orders, and then we went up, and then we have opened or increased a third time, making the total of 4 orders composing the position. And then we went to break even. So starting from 3 orders, the strategy will consider closing the position at break even. So as you can see, the more you increase the this parameter, which is the grid size to break even, here we tell the strategy that don't close the position until we have a minimum of 3 orders. I personally use the value of 2 because the ultimate goal of this grid or dollar cost averaging method is to close the position as soon as possible. It's like an urgency method to exit as fast as possible. The second parameter here is the break-even profit shift. And this break-even profit shift will start from the value of 0, and you can set it to any positive number. So if we set this break-even profit shift to 0, for example, and enable this strategy, I remember that I have set the grid size to 2. So here we have the shift. In fact, this parameter, the shift parameter, will tell the strategy that calculate the break-even level exactly at break-even. So 0, there is no shift. If we set this parameter to 0, it means that we don't want a shift or an additional ticks in regard to break-even level. But if we increase this value and put, let's say, 7 or 10 or 20 or so, I'll just put 5 here. This tells the strategy that don't close at break even, but shift the break even level to 5 ticks. And the goal of this is to generate some profit. Because if we close at exactly break even, don't forget that we have commissions and maybe you have some slippage, and so we better shift a little bit the break-even price to generate some profit. But you can also shift many ticks. So for example, I put 7 ticks, and this will generate some profit. So for example, if I go to the statistics here and analyze the trades, we can see that the first 2 trades, this one and this one. So the first one was closed with approximately $6. The second one, $13. And so the accumulated net profit was $8. So by setting this little shift, we have been able to generate some profit. On the other hand, if we set this parameter to, let's say, 0, so we will close the position at exactly break even, we will see that we have lost some money here. Okay, if I go to trades, okay, so you can see the first position here closed with $10 in loss, the second one $8 in loss, and the total of this was approximately the commission. So at the end of the day here, we are losing money. So this parameter, the shift parameter, will allow to generate some profit even by closing at break even. Okay, so I think we've done with the parameters here. And if you have a question regarding some of the other parameters that I didn't explain in this video, please refer to the page of the product. I think I have put some in-depth details and explanation of the parameters there. So one last thing I would like to show you is to how to run backtest and optimization on this strategy. So if you go to NinjaTrader here and open Strategy Analyzer, we will see this window, and here you can actually run backtest and optimization on the strategy. And let's do this together here. So I will select, of course, so the strategy was selected here. That's the first thing you should do, select the strategy. And then select here, this backtest type is not a parameter of the strategy. In fact, this is a parameter of the NinjaTrader strategy analyzer window. So here, in fact, you can run many type of backtests. You can run a simple backtest. You can run optimization, which I do a lot to find the best parameters to run the strategy. You can run also some other types of optimization: walk forward, multi-objective, and AI. So I will show you how you run a simple backtest of the strategy. So you select the backtest, and you have to check the backtest mode here. So the strategy will run trades and will open trades on the historical data that will be loaded in the backtest. If you don't check this, you will not see any trades. And this parameter is useful if you want to run the strategy on live mode. If you run it on your VPS and wanted to take live trades, don't check this parameter. So daily take profit target. Also, this one is explained on the product page. Daily take profit. I will leave it as 1,000. It's like a. I will not set it here because I don't want the strategy to stop taking trades during this backtest. So I'll just leave this here. Daily take profit to 1,000. Maybe another very high value. Stop loss limit. I will not set stop loss limit, but you can set those on your live trading settings. The strategy. So we set this ICT Concepts strategy. Render is not important here because we do not visualize anything, so I'll leave it at the default value. I will set these parameters the same. Higher time frame period, I will leave it as the default because it's not taken into consideration, because we are not selecting a higher time frame. We're selecting the same time frame as the current one. Swings period, leave it as 3. Trend swing count, leave it as 3. The drawing, I will not check this. Okay, so the trade time here, please take into consideration that this time is very related to your local machine time. Here I'm in Switzerland. The trade time is shifted 6 hours from the EST time, so I will put this at 6 a.m. and 1 minute, which is approximately EST, it's midnight. And we'll close the strategy at 10 p.m. 58, just 2 minutes before the session close. Enable FEG fair value gaps, okay. Breaker blocks, no, I will not enable breaker blocks. Also this parameter, long short entry mode. In fact, you can restrict the trades to either long, short, or both. Useful maybe if you have a predetermined bias for the day. I will just leave this long and short for this backtest. Trade entry mode, yes, this one I didn't talk about. In fact, this will set the entry mode to either immediate, it means after a fair value gap, or a breaker block. Let's take an example here. So in fact, this entry is a good example for this. So for this entry, in fact, after the closing third bar of a fair value gap here, because we have set this entry mode to immediate, the strategy will immediately open a trade here after the close of this bar. But if we have set this to pull back, this entry will be entered here, in fact. So the strategy will wait for a pullback until the retesting of the fair value gap, and it will open a trade here. So you can experiment with this and see what suits you best. So I will leave this as immediate, or the quantity I will leave it as 1. Here I will set to, I will check it, minimum gap I will set to 15 ticks. Here I will set none. In fact, I will not set a order management strategy. Here the on opposite signal, yeah, I didn't talk about that. In fact, this sets what to do when we have an opposite signal when a trade is open. So if you have an opposite signal, you can choose to break even the position. So you don't close the position, but you set the stop loss as the break even price, or you can immediately close the position, or you do nothing. So I'll just select do nothing. Stop loss strategy, I will put this as last swing price. Take profit strategy, I will put this as 1-to-1 win loss ratio. Max risk currency, I'll put this to 100. Take profit 100. Break even profit shift. This will not be used because we didn't use the dollar cost averaging, so I'll just put it as 1 and 2, just to not put it as 0. Instrument, I will select the MNQ price based on minutes. I will use the 3 minutes time frame. This is the most important one. I should select the tick replay option to have a very precise backtest. I will select the start time and the end time. Start time I will select 1st of January, yeah, 2nd of January, because I think the 1st of January was a holiday. February, I was at the end date, I will select yesterday, the 9th of February. And I will just leave the other, include commissions. Yeah, I definitely would like to include commissions, and I will run now. So you can see you have to set all these parameters to run the strategy. So I will run now and pause the video and go back when it's finished. Okay, so the backtest is finished now, and we have a relatively good result. So the things I'd like to look for in a backtest result are first, yeah, of course, the total net profit, which is a good net profit for the period from approximately 1 month and some days, $2,000, not bad. Knowing that we have chosen the order quantity to be the minimum one, which is 1 quantity. So if we increase the minimum quantity, let's say we put 2, 3, or 4, the net profit will be higher than that. So the second thing I would like to look for is the commission. If a backtest doesn't contain commission, I will have doubts. But here the commission is present, so good. The second thing I look for is the maximum drawdown. So here we have overall drawdown, which is not bad, which is approximately $300. Next thing I look for is the total number of trades. I look for a balanced trades between the buys and the sells. So here we have approximately 70 trades for longs and for short trades. So these are the things I look for. Not very complicated. I go to the analysis. So here we see a beautiful a curve that represents the progression of the profit and loss of this strategy over this period. So we can see that we have some good days, we have some bad days. So it's a realistic backtest. I like that a lot. So there you go. It was a quick overview of the ICT concept strategy. I hope you liked it. And if you have any question, please go to automated-trading.ch and ask question. Of also, you can join the Discord that you can find on the Discord that you can find on the product page. Here you can click and join our Discord, please. And if you have any question, please click on the contact and send an email. I will be glad to help. Also, I will tell you that this strategy is a premium strategy that needs you to subscribe, and it only costs $50 to subscribe, and by subscribing you get unlimited access to all our strategies and indicators and articles. And of course I'm planning to add many more strategies and indicators, so with one subscription you get access to all of that. Thank you for watching, and I hope you're having a good day, and bye bye.